What's up everybody, my name is Bowie and in today's video we're going to talk about how you can trade on Bybit, why I think it's the best platform you can use today, how the user interface works and how you can successfully enter and manage your trades. Let's go! First of all, I want to explain you guys the difference between spot trading and futures/margin trading. Spot trading is basically investing. You buy a coin at a low price, you wait for it to go up, and then you sell it at a higher price for a profit. The money you put in that trade is 100% yours. But margin/futures trading allows you to use leverage, which means you can basically lend money from the platform so you can get way more profits or, of course, way bigger losses. The money you put in the trade in margin/futures trading is not all yours. With spot trading, you can only profit from the price going up. But with margin or futures trading, you can even profit from price going down, called shorting. So now we know that, I want to tell you guys why I think Bybit is the best platform you can use to trade today. Number one, there is a 0% spot trading fee, which will save you a lot of money in the long term. Number two, there is no KYC. That means know your customer. It's a way for the platform to verify their customers by receiving legal documents such as water bills, identity cards, driver's licenses, and so on. When I first started trading, I made an account on Binance, but it was just so hard to get through the KYC because they were asking me legal documents of my location. I sent them and they were just not accepting my documents, which was really frustrating, but I didn't have that problem with Bybit. On Bybit, it's just so much easier to start trading. They are less strict and therefore more accessible to everyone. Number three, Bybit has the lowest fees on futures and margin trading. And number four, Bybit has amazing liquidity. Liquidity basically means how easy it is to get in or out a trade. High liquidity basically means that there are a lot of orders and it's easy to get in and out a trade. But low liquidity means that it is very hard to buy or sell because there are just no orders in the area you want to buy or sell. So high liquidity is a must and Bybit has that for sure. So those are the reasons I use Bybit for trading. And let's now talk about how you can actually trade on Bybit. So here we are on Bybit. The first thing you gotta do, of course, is make an account. So go to the top right and click on sign up. I already have an account, so I'll just switch to mine, but just if you don't have one, make one quick and then you can follow along with me. So here we are on the spot trading section of Bybit. I explained what spot trading is earlier in this video. It's basically for investing. You buy an asset low and you sell it higher. Very easy to use. On the left, you just need to pick a coin. Right now I'm picking Ethereum. Then on the right, you'll find everything you need in order to enter a trade. Now there are two options you can do for entering a trade. First one being a limit order. A limit order is basically telling the platform to enter a trade for you at a specific price you choose. So for example, I'm on the Ethereum chart. Ethereum is currently trading around 1.2k. So I want to get in and buy at 1k, for example. So what I do is basically enter 1k in the order price box so the platform knows that we want to buy at that price. Then we need to choose how much Ethereum we want to buy. So for example, I want to buy 0.2 ETH at 1k. And then it's very simple. You just need to click on buy Ethereum and you're ready to go. Now you're not entering a trade immediately because you put in a limit order. If you want to enter a trade immediately, then the market option is the one to use. The only difference with a limit and a market order is that a market order will put you in the trade immediately at the price it's trading right now. So basically, price of Ethereum is right now 1.204. So the only thing I need to fill in here is how much I want to buy. And if I click on buy ETH, it's just I'm immediately in this trade. I don't need to wait for a specific price because I want to buy right now. You see, the only difference is that I don't have an order price box in the market order. That's just because I want to buy right now at the price it's trading right now, which is, for example, right now 1.204. If I click buy ETH, I put in $50 in ETH, I buy it at this price right here. And I'm in a trade immediately. So this is basically investing. You buy low and sell higher. This is very easy, but let's make it a little more difficult and go to the margin/futures platform of Bybit. So let's go to the menus and hover over derivatives. There you want to click on USDT perpetual, which allows you to use leverage. Click on that. And right now you'll see that this looks very similar. There's some differences, like if you want to switch to another coin, you need to hover over the hamburger icon right here and you can switch through other coins. Right now I'm going to XRP. It looks very similar, like I said. The only difference is that here in the order section, you'll find on top the margin mode settings. So basically your margin is the money you put in your trade. It's not your full position, because I will explain you now. Leverage is something amazing. It allows you to lend money from the platform, so you basically play with a lot more money than you actually have. Let me explain leverage really quick right now. So basically, for example, if I put in $100 in a trade, which is called my margin, then I put a 10x on my leverage. It basically means that I'm not playing with $100 anymore. It means that I play with $1,000. Which makes your profits way bigger, but also your losses way bigger. So if my margin is $100 and I put 10x, I play with $1,000. So if I make 10%, that's not $10 profit, but that is $100 profit. But of course, also potentially $100 loss. So watch out for that. Leverage can be something amazing, but also something very terrible. Now on top, you'll notice that we have two modes we can choose from, one being the cross margin mode and the other one being the isolated margin mode. I will say right off, I think cross margin is way better, but I'll explain you how it works. If you pick isolated margin, then that means that the platform will automatically put you out of your trade when the money you put in is gone. So for example, if I put in $100 and I use isolated margin, then the platform will put me out if my $100 is gone. But cross margin is a little different. It is basically for when you have multiple positions open, so you have like 2 trades open. So when one trade is in profit, you have more room for the other one to go down. So basically it uses all your margin across all your open positions to cover your losses, which is not the case in isolated margin. It only uses the margin for that specific trade. I use cross margin, it's better to cover losses. So now that we picked our margin mode, we need to choose our leverage. And yes, I know what you're already thinking. You're gonna go with 50x leverage, so you can make 50 times more profit and you become a millionaire in one day. No, please don't do that. I really recommend to only use up to 10x leverage if you are a beginner, because you can make a lot of money using high leverage, but you can also lose a lot of money when you have a high leverage. So please don't go higher than 10x. So you'll see that we have 2 sliders right here, one for leverage long and one for leverage short. You use the long slider if you think the market will go up, and the short slider if you think the market will go down. That's the really big difference with spot trading and margin or futures trading. Spot trading, you can only make money when the price goes up, but with leverage, with margin futures trading, you can make money from price going down, which is amazing. So I'm now gonna explain how I enter a trade, what I do, how I manage my position, how I get out of it, all of it. So stay with me. So once I think the market is going up or down, I head over to the order section of Bybit, and I mostly use limit orders, because remember, limit orders allows you to enter the market at a specific price you choose. So let's say XRP is right now trading around 0.34 cents. So I want to enter at 0.34, for example. I don't want to enter right now, because if I want to enter right now, I need to use a market order. But so I mostly use limit orders. How do I do it? So let's say I want to enter at 0.3419. So I put in the order price 0.3419. Then on the box below, I highly recommend to switch this to order by cost. This basically means that you can define your entry with USDT. So I put in $50 and not like I put in 0.1 ETH, because God knows how much that is. Just put this to order by cost. It will help you. You just need to put in the USDT price instead of the Ethereum or other coins price. So let's say I want to buy XRP for $100. So right now it's telling the platform to buy 100 USDT worth of XRP at 0.3419. So once you did that, you'll see two buttons below, open long and open short. I explained this earlier. Open long means that you think the market will go up from here, and open short means the market will go down from here. But before you do that, please check this box whether you're buying long or short. If I, for example, now think the market will go up, that means I'm longing the market. So I click this buy long. Skip this one. We only use the stop loss box. This is the most important thing for trading. Please use a stop loss. It's basically a price at which the market will immediately automatically put you out of your trade when you are in a loss. So here you can define what your total amount of risk is. What's the amount of money you want to lose in this trade? So basically what I do, I just play around with it and I put in, for example, 0.32, and under below, this is the most important thing, you'll see how much you're gonna lose if price hits that point. Right here, your expected loss will be $64. So this is the thing you need to look at. When you've done that, it's time to enter a trade. Right now, I'm just gonna do a test trade to show you guys how it works once we are finally in a trade. So right now I'm on XRP. I'm entering at 0.3451 with $10. And of course I use a stop loss, which is 0.3469. I think price will go down, so I click open short. Before entering a trade, Bybit will automatically give you a pop-up window saying, this is everything you're gonna do right now. Please check it so you're not making any mistakes. Don't checkbox this right here. It basically says do not show the confirmation window anymore. It's very important to just double check what you just did. So don't check this box. Click confirm, and right now you'll see I immediately enter the trade because my order price was very close to the market price. This window right here, the positions window, will tell you everything about your trade. How is it doing? When did you enter? How you're gonna get out? All of it. So let me show you how it works. So we'll go from left to right. Right here you'll see which coin you're trading. At the moment this is XRP. How much did you trade? It is 285 XRP, which will display here under the quantity, then the value of it. And notice that the value is different than the margin. The margin is, like I explained earlier, how much money you put into the trade. This is how much the trade is worth. That is the beauty of leverage trading. I only put in $9, but it is worth $98. So the profits will be bigger, but also the losses will be way bigger as well. So this is at which price I entered. I entered at 0.3453 XRP price. This is how much the price currently is. This is the price at which I will be liquidated. Liquidated basically means that I will lose all my money, but because I used a stop loss, it's not gonna go that far. This is the margin, how much you put into the trade. Right here, the unrealized P&L basically means the profit and loss you have right now. Right now, I'm winning 2 cents, and you see it's changing. I'm losing 2 cents, so here you can check what your profit or your loss is. This is your realized profit and loss. This is basically the fees you paid to the platform, and this will not be a lot. This will only be like a few cents, but important to know, when you choose a market order, it will be more fees than limit orders, because limit orders, you're basically placing orders and you're providing liquidity to the market, but with market order you enter the market right now at the price it's currently trading, so it results in bigger fees. So how do I take my profits when price is moving my direction? So let's, for example, say I want to take my profits when price hits 0.3473. So what I do is I go to the last section right here under the positions tab. I click on limit. So right here, this is the window you want to use for securing your profits. First thing you want to do is put in the price you want to get out. So let's say I want to take my profits at the price of 0.3459. And here you'll see immediately how much profit you'll make. 25 cents. If I put a higher price, of course, you will make a lot more money. Then right here, don't use this box, just use these buttons to define how much of your position you want to close. Let's say I want to close 50% of my position to secure my profits, but let the rest run. Then I can do that. But right now I want to close my full position. So I click 100%. I click confirm, and right now it's putting me out of my trade because my closing price is lower than the market price. So it's something very stupid. I just want to show you guys how it works. But normally it's set, the order is set, and you need to wait, and at that price you will take your profits. So if you put money on Bybit and you want to see your assets, you just simply go to the assets menu right here. You click on your assets, and right here you'll see everything in your portfolio. Something very important to know is that if you want to trade leverage, you need to move the money from your spot account to your derivatives account. You can simply do it by going to transfer and then saying that the spot needs to go to derivatives, and then you can trade right here. So that is it, guys. I hope you learned something here. Don't forget to subscribe, like, and hit the bell. If you have any questions, don't hesitate to ask them down below in the comments. Hope you have an amazing day. I see you tomorrow at the next video. See you.